Hey, welcome back to the channel, Fully Invested Phi Labs. Today is episode 10 of the full paycheck investing series. As usual, I'll be showing transparently the full flow and thinking of investing my full paycheck and how I pay bills and live out of my Robinhood brokerage account. And as usual, I'll be doing this all uninterrupted and in one take, so forgive any mistakes. And also, just a quick reminder too that I'll be back to posting content like this on my main channel, Fully Invested Phi, on January 24th, when my last strike expires off the account. So if we go here, January 24th is the day this last strike expires. So after that date, the current channel that I'm posting this on, Fully Invested Phi Labs, will only post about my retirement accounts, my mom's retirement accounts, things like that, early retirement thoughts. And then after the main channel, that'll be mostly for my taxable brokerage, so anything to do with my growth and high-yield ETFs. So the bread and butter that started my channel, really. So just a heads up. And as usual, just a quick disclaimer. This video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. So before we get started, as usual, this is the monthly flow chart that I use to invest 100% of my paycheck and live out of my brokerage account. So practically what that means is that 100% of my paycheck gets invested into my brokerage, at least 10.8K every month, into growth and high yield ETFs. I've stopped using a traditional bank to live entirely out of my brokerage, using cheap margin of 4.5% to bridge the gap between my bills and my dividends. The goal is to never sell a share unless I'm rebalancing stuff, and forever compound and have my monthly dividends eventually exceed my monthly expenses. For an in-depth breakdown of the video, check out the link at the top right here. And let's just get started. So if we pop over to Robinhood, you can kind of see the account here today. So a nice green morning to kind of start things off, and it's been a good year to date so far. Had a strong start to the year, so I've been pretty happy about that. Hopefully it keeps up. But let's just kind of pop over and send the full paycheck over. So if I go to my spending account here, I've got my paycheck that came in. So we're just going to push that whole paycheck into the brokerage account. So we'll do that from spending to individual. So just push that full amount. All right, cool. So if we go here and refresh, now I have $161,547 in there. And as usual, we'll start with growth investing first. So I think this week I'm going to do things a little bit differently as far as what I'll be investing in. So for the last couple weeks, I've been investing basically 500 into single stocks and 1,500 into ETFs. But there's two particular stocks that I've been eyeing that have had like a little bit of a dip in the last year to date, really in the last few weeks. So if we go over here and the nice find a dip tool from Snowball, we can kind of like filter over here for all the stuff that's been down. So over the last 10 days, you can kind of see that Meta's gone down here. Take-Two has gone down here. 50 days. Hood has gone down here a bunch. Meta, Take-Two, 100 days. Meta quite a bit here. Microsoft. Microsoft and Apple haven't had a great start to the year as well. But the two that I'm eyeing though for today is Meta and Take-Two. So Meta, has had like a bit of a laggard start to the year, but when you really dive into like their finances here, if you really dive into their finances, they're still doing pretty amazing when you look at those trend lines as far as the revenue per segment, free cash flow, and all that. Debt is definitely creeping up over the last since 2025 with all the AI expenditure. So I think that's like what's kind of keeping the stock down a bit. But overall, like this dip kind of makes me think of like when it dipped in 2022 when it did the whole Meta rebrand, and then it was kind of going all in the metaverse. They just had layoffs for their VR studios, unfortunately, this week. They closed a bunch of studios. I actually have like some people that I knew that worked there. So again, good reminder of like why I'm doing this strategy as far as kind of creating another stream of income that's outside of my job. But when you look at their numbers though, still growing, and like in 2022 when they had that big dip, right? You can kind of really see how it's just kept growing, and it's really bounced back since then as well too. This was like at the bottom of 2022, so a bit of a dip here. Still crazy high from where it's been, but I think I'll buy that. And then for Take-Two, so that one, given that I'm in gaming, I always keep an eye on that. And there was a bit of a dip that happened over the last couple weeks, and literally just because of misinformation, where like this one journalist, Jason Schreier from Bloomberg, had just talked on a podcast about it and just kind of giving his opinion on where it's at. And then people just ran with it, like whether it was like AI articles or people just ran with the fact, oh, they confirmed that like, oh, it's going to get delayed for sure again for a third time, which wasn't how he was talking really, if you listen to the podcast clips. So yeah, just that like helped like dip the Take-Two stock a bit, which is crazy. So yeah, like if you look up their stock here, yeah, year to date it's been down 2.82%, and then same for Meta here, year to date. So yeah, these are two I'm gonna do just because they're in a decent dip that I would want to buy. So I'm gonna put $2,000 towards them. So 1,000 in Meta and then 1,000 in two here. Yeah, let's just do that. So $1,000, cool. And then we'll do the same for Take-Two. So if we take the amount that I transferred over, 0.61, so minus 2,000, I have this much left to invest. So what shall we invest in for the high yield ETF side of things? So I had two in mind today, actually. So one of them is XPAY, which, yeah, I've just been super impressed by XPAY overall as like a good anchor stock in my high yield ETFs. Yeah, you can kind of see where I bought over the last year, and what's been nice is that it has stayed like pretty NAV stable and like has had a positive total return when you look at it. So like its capital gain is even up, and I've just gotten consistent dividends from them as well too, which has been nice. Yeah, you can kind of see how consistent stuff is, right? So yeah, it's been a positive NAV, positive total return, consistent dividends. So yeah, I just want to be building this up a bit more, and it's like a nice 20% yield with their managed distribution. So, and yeah, it's indexed to the S&P 500. So really can't go wrong. Like part of me wishes they actually had like a NASDAQ version of this, which would be kind of nice, like XPay and then like QPay or something like that, you know? That's what I'm going to do. So I'm going to do XPay. And then also I was thinking, so BTC has had like a bit of a dip over the last little bit, right? For the last few months. So, and it seems like it's a little bit more in an upswing. You can kind of see here, right? It's kind of swinging back up after a big drop since October. So yeah, wish I had bought the dip a little bit earlier in this time frame, but buying it now as it's kind of upswinging. So yeah, we'll kind of do that. So I think I'm going to put a majority into XPay and then just like a little slice into BTCI. So yeah, so kind of keeping with the like pushing more into the anchors and then having a little bit more in some of those higher yielders essentially. So yeah, so really what I'll do is that I'll put 2,440 and 61 in XPay. So if we go to XPay, I'll do 40, that's 61. That's right. Cool. Done. And then we'll do the same for BTCI. Or not the same, but $1,000 into BTCI. So that's 61 and then $1,000 left, right? Great. And that's that for the full paycheck investing. So that's like the full paycheck invested. So you can see that like the number here hasn't changed since I deposited the money, right? Just because I basically invested it. So those, whatever I deposited basically became assets. So that basically pulls down a margin, right? Or it pulled it down when I deposited, and because I invested it, it pushed it back up to what it was. But my margin total here has gone up. So, but now this is about to go back down because we're just going to pay a couple of bills here. So if I pop over to my little bill sheet here. So yeah, the bill that I'm going to pay today is actually just one bill. So I'm just going to pay my Chase Amazon credit card here. So this is my Amazon card that I just use for Amazon and Whole Foods, basically, because I get 5% cash back on all that, which is really nice. So yeah, just be paying that. So this is kind of like the color code I'm using. So I'll be pushing this orange essentially on this. And yeah, normally I would pay my auto insurance. But yeah, what I did in the last couple of weeks as I was kind of reevaluating my budget for the year is that I actually changed my policy to help lower my payment. And then also what I'm wanting to do is to pay the full amount every 6 months now instead of monthly, just so I can get a bit of an extra discount there. So yeah, so my auto insurance payment went from $144 a month down to $106 per month. So good savings there over the year. And yeah, so I'll just do that. So I'm going to transfer over $936.73 for my Chase card here. So I can kind of just do that in the spending account. So I can kind of take for my individual here. So I have like 34.9K of cash available for withdrawal, right? And then I'm going to send this to my spending account. So 936.73, oops, 73. And from individual to spending. And then yeah, after the video's done recording, I'll basically draw this from this account basically. I just don't want to waste time showing that on screen. Cool. So 936.73. And yeah, that's all for the bill. So pretty light week this week as far as bills. And yeah, I just got my cash back payment that came in from Fidelity as well. That's my 2% cash back card. I just invested that into gold this morning. And yeah, now that's where we're at as far as numbers. So now actually let's update the sheet based on all these new numbers as well too. So I'm just going to go here and then go back to my sheet here and update these. So this has gone up, the margin total, because of how much I invested. This has gone up because of like the bill that I paid as well. And then we'll just add the positions as well too. So do XPAY, BTCI, Meta, and take two. So we're just going to update the average cost there. So this one will probably go up a little bit because I'm actually positive on this. Update the number of shares here. And then BTCI. This will be a nice average down, or yeah, average down really. So 62. And for Meta, this one will be a bit of an average down because of the dip in the recent weeks. This is actually in the red now. And actually Costco is out of the red now after it's like nice run up at the beginning of the year. So Meta, I don't remember which one that's not. So this is a nice little average down shares. And then for take two, this will be a bit of an average up just because like I bought it at a good price last year. And number of shares. So yeah, that's all the buys. So with all that basically puts my gross value of the account at $308,445, which is great. Margin uses ticked up a little bit. So like as I pushed the paycheck in, that like dropped down, but then because I invested it, then that pushes it back up. So yeah, my gross market value like grew by that amount for my paycheck. And then now my net value is sitting at $160,489. So yeah, that pushes my growth assets to $168,501, and then my high yield income assets to $139,944. So yeah, just under 55% for growth and a little over 45% for high yield income here. So to total my 308,000 here. So that makes my equity now at 52.03%. My margin buffer has grown as well too. So now it's at 26.53%. And yeah, still have a buying power of $68,194 and also a cash available for withdrawal of $34,000. So this is basically the difference between these two numbers essentially, right? And then this is basically half of the buying power. So yeah, I always want to keep this healthy. I don't want to use up all my margin here and just kind of keep my margin buffer healthy, my equity healthy and all that. If we look at like my monthly dividend, so this has grown. This was like at a $5,100 or $160 roughly. So this has grown, and we can actually just estimate here as far as like how much I pushed up my dividend by today. So like how we can kind of do that is, let's see here. So I basically put $2,440, that's 61 into XPAY. And then XPAY's dividend right now is, 21.15. The current yield, my yield on cost right now is 21.74. The current yield right now based on the price is 21.15. So you can kind of do that. And then, so this is basically like the yield that I'll get from this money over the year. If I divided this by 12, I basically just added $43 a monthly income through my XPAY buy today. And then for the $1,000 in BTC, right now the yield should roughly be 34.72%. So you can kind of do that. And then this is on the year, divide by 12 again, $28.93. So if we plus that, today I added roughly $71.94 in monthly income through those two buys. So yeah, keeping stuff a bit more conservative this year. Yeah, basically how I'm going to split stuff for the high yield stuff is like, invest a good portion into an anchor like XPAY, like QQQI, TDAC, things like that. And then also just like a smaller portion into like some of the higher flyers like WPay, Alti, YMAX, and things like that. So want to keep a better balance of that this year. That's kind of like one of the big learnings I had last year. So yeah, right now, the ultra high yielders are a little bit heavier than the rest. So I want to really build up this anchor portion here, right? And yeah, kind of reduce some of that stuff. So yeah, just want to have a higher, safer portion of this. So even this one, you can kind of see that it has like a positive NAV even between all of these, right? Which is great. So, and then here, obviously there's a lot of erosion because of these, they just pay a lot more, and that drops the NAV by a lot more and has a lot more to make up over time. So yeah, that's the full paycheck investing today and the full flow of it. So yeah, hope you appreciate that being step by step and fully transparent as usual. So yeah, as far as portfolio update this week, just a heads up that like this weekend I'm going to be pretty busy, so I'm not going to be able to do a video. So look forward to next week being a meteor portfolio update video that encapsulates 2 weeks. And yeah, that's the video. So as usual, if you want to follow me off YouTube, there's tons of different ways you can do it. You can do it through Blossom Social here. You can of course follow my Snowball analytics portfolio, and all these things that I'm mentioning, by the way, are in the links in the description below. So you can follow all of this for free. Not gatekeeping or paywalling any of this. Yeah, you can kind of see all my real numbers, like love being transparent about all that, right? And I love all the stats and charts. You can all look that up. So yeah, you can kind of see all that. And then, yeah, there's also my Patreon too. This is just a good backup in case there's any more shenanigans with YouTube. I upload all my new videos on here, day and date, and my full backlog across both channels are on here. And yeah, and then of course there's the Discord too. So yeah, growing member base here now. We're pushing over 239 members, and yeah, just great discussion here in between videos. You see all my trade alerts as well too. And also right now I am I posted my investment sheet for people in the Discord to kind of play with and give any feedback. And yeah, in a couple of weeks too, I'll be posting this on Gumroad too for free for the general public if you don't want to join Discord. But yeah, that's there in case you're interested. But yeah, love the little community that we're cultivating here that's positive and helping each other out no matter what your strategy is. So yeah, great way to connect with everybody and like-minded investors. If you got some value out of this and you're excited to follow future portfolio updates, like and subscribe, and I'll catch you in the next one. Peace.